Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 22nd, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video. So last time I said that these videos are going to go to subscription only. I'm thinking about trying something else now, so we'll see how it works. So stay tuned. I'll reconfigure my sign up screen. You can go to everyonecantrade.com, one word. It will take you to the products page. So right now I have 3 products: trading indicators and blogs, basically. So the best thing to do is just get the speculator bundle for $100. Let's go back to the video. So this week I'm going to cover in the public YouTube video all of these topics, and then in the members only section the following stocks will be also covered. So you can see a speculator newsletter. There's quite a bit of stocks, and for elite, like large cap and ETF stocks, not as many, but there's also things like Forex that is also covered there. Anyways, so those are the changes. Let's see how it works. I welcome all the feedback. Let me know. Stocks are consolidating near the all-time highs, so we are looking again at new all-time records for stocks. Junk bonds are confirming this move higher, and we may see a small bounce for treasuries, but I think the trend for treasury bonds is down, and by extension treasury yield will go up. I'll give a couple of examples, one for General Motors, one for another company called Finvolution. Never heard of those, but we traded them as well. I think dollar is trying to bottom, and we'll look at how it's affecting precious metals and why it really pays to sit tight when you're trading. Ethereum over 300% up since the alert. Okay, so let's get right to it. Again, you can find me on everyonecantrade.com or MasterChartsTrading.com. I use my proprietary trading indicators. You can see them on this chart. They're the green, blue, red, and yellow lines, and they are basically all I use for trading. So how do they work? The indicators work by actually drawing for you the support and resistance lines. So to use the support and resistance successfully, you need to have a reference point. So this is an example of a trend trading. If the trend is down, we're going to be selling or shorting, and if the trend is up, we're going to be buying or going long. So in this case, the trend reversed itself back on April 29, 2020, before the stocks were going down, and then since then the trend has changed. How do I know? The only reason I know is because my indicators showed them to me. You can see it clearly on this chart. Again, these indicators are actually programmed in. They're not just drawn in by hand, so I can turn them off, and you can see that it's not nearly as easy to visualize. Why would you be entering back here in April? But with the indicators on, you can clearly see why. So this is the reason why I entered, why I sent to my subscribers, and why we're still sitting in the position. So you can see that we are now at all-time records. And for longer term holds, really you can trail at the blue line itself. So you can take profits around the green line, and you can trail at the blue line. So these lines, they just means good places for sellers and buyers to make a stand. In this case, they were breaking out. You can see it clearly back here in April and May. Dow Jones still in an uptrend. Again, new records just yesterday on 21st of January 2021. Buying was back here in May of last year. This was good buying opportunities, but since then really there were no good buying opportunities, and we just sit in a position and slowly trail it higher. Will we see a top sometime soon? It's very much possible, but we don't know when. We can see something similar to what happened to the Nasdaq bubble, where the top just kept not happening and eventually it happened, but you cannot call it. It's basically impossible to call the top. So don't even bother. Look for trends. Look to get in on a trend, and my indicators, they just show it to you basically. Here's Nasdaq QQQ going into stratosphere, up 54% since the back in April when we started buying. You can see again we trail at the blue line, so the blue line was never hit. You can take profits around the green line, but you can just as well do nothing. Again, it makes more sense to do very little in the stock market. So QQQ, Nasdaq again at new records, trend trading at its finest. We just keep advancing the stock, keep going higher and higher. Small caps, also very nice move. Close to 50% move for the latest opportunity, which was in September of last year, and it just doesn't seem to tire. It just keeps going. I have several small cap positions myself, and I'll show some, and I also gonna show one small cap position that we just traded in Finvolution. And then if you're interested in speculator newsletter, there's literally a ton of them that we look at. Small cap stocks that are just exploding higher all of a sudden for no good reason, really, because we don't really know what they do, or quality of their product, etc. But the technical trading is pretty straightforward, pretty simple. We don't really worry about any of this stuff. We just look for a pullback towards where we want to be buying, and this pullback did occur 24th of September, so this is what happened. We just bought it there basically. So normally junk bonds and stocks, these are junk bonds, ETF, J and K. So junk bonds and stocks normally move together in lockstep. In other words, if the stocks move higher, junk bonds should move also higher. And if there's sometimes a divergence, sometimes for example, stocks are moving higher, but junk bonds are not. So that's a divergence. But usually they move together, and you can kind of clearly see it. Junk bonds actually broke out a little bit earlier than stocks, whereas stocks broke out like in late April. Junk bonds broke out in early April of last year. So we just started buying it back then, and we're holding the position, and it's going to new highs for the move. It's possible it will go to new highs, 52-week highs pretty soon as well. So right now, junk bonds and stocks are confirming this bullish posture that we are, experiencing, and we're continuously buying stocks basically. On the other hand, treasuries, these are TLT, long-dated treasuries. So you can see they broke down. Treasuries broke down. In fact, they entered the bear market per my definition. Looking on the treasury yield, TYX, you can clearly see this breakout. And additionally, we were predicting it. If you listen to my previous videos, you can see that the indicators are curving down. And I'm going to turn on my next generation of indicators, which project the price action forward. And you can see that it follows really just right on the money. So the predictive value is quite high for the certain patterns. And this type of pattern where there was no new high yet, made end, you can see the indicators are curving together, getting close together. So these types of patterns are quite good, future prediction. So we're seeing this breakout for for the yield. So what does that mean? That means that government will need to pay higher yield for borrowing money. But there are people who are saying that the Federal Reserve simply won't let this happen. For now, what I'm seeing is actually a move higher for the yield, and we're just going to take it at face value. And maybe, I mean, we were even thinking about shorting here. So if you're sophisticated, if you can open, for example, shorts, or you can also buy puts, then you can reverse your thinking and short Treasuries. So to reverse your thinking, we normally buy and we put our stop at the yellow line or at the red line for Forex and type, for example, TLT, I usually trade at the red line. So doing the opposite, we're going to put our stop at the blue line, and if it goes against it, we'll exit. But usually, we should be able to at least get to the target, and target is 2 average true ranges, ATR. I can explain this in very quickly, so if you have any questions, ask me. Okay, so looking like we may see a pullback. You can see the indicators are curving down, so it would make sense for the price to kind of attract it. So a pullback for the yield would imply a good place to, if the pullback for the yield, if the yield pulls back, that means the bonds rally in price. So I'm gonna be looking out for a rally for bonds, maybe into March. You can kind of see a good place to be selling, shorting it. So let's see where it gets. Let's see where it gets us. Okay, so a few examples, and also I'll highlight sometimes that knowing the future is really not always helpful. So here's one trade that we did recently. This is General Motors. Alert was sent here on the 2nd of September, another one 1st of October. Why did I send it back here? And it's quite clear. Even if you never traded, you can kind of see where the price is. You can see the green candlesticks are above the blue line, so that's your target trigger. We buy it here, we put our stop at the yellow line. Our target is 2 average true ranges. Here's ATR, so we can easily make the target right there. And then we just trail. We sit in the position, we trail at the blue line, we advance our stop. We can take profits. Usually what I do is when the price comes up above the green line and then comes below it, I take profits. So you can do it a few times, for example. But the best kind of scenario and the best kind of traders really are the ones that do very little, and they just kind of get in the position. Notice if you get in here on the 1st of October and you just did nothing, you may need advance the stop, move your stop to entry first, and then maybe move the stop to the blue line. But if you did nothing, you still have a full position, and you're up 88%. So as I keep saying, doing very little, it makes much more financial sense. So if you're right, also try to sit tight. So this is the type of trade that I would describe as a breakout trade, and I actually prefer it more because I will need to do a study to see which kind of trades are better. Are they breakout trades, and why is it a breakout? Because notice the price was below the yellow line here, so it's a new breakout. Price was way below the yellow line here in March, and then it closed above the blue line. So that's a breakout trade. The other option is to do a pullback trade. So let's say the price is already above the blue line and it pulls back towards the blue line, then we buy it here. So 2 ways to do this. Just from personal experience, I kind of like the breakouts more because they sometimes just keep going. And here's another example of a breakout trade from the speculator newsletter. So Finvolution, I knew nothing about it. This stock was in a downtrend forever, since October of last year, 2018 rather, and you can see it was just down, 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 nowhere to go but down. And all of a sudden something happened. There's a breakout on the 2nd of December of last year. I didn't really question this, and I just kind of looked at it, and then a few days later there's the actual alert on 29th of December, and it went immediately in our favor. Isn't it nice? That's a 64% gain. So it went from $2.36 to like $3.87. It's a very nice gain, especially if you could play it with options. There are call options, not exactly most liquid instrument for this particular stock, but still, you can still play them. So this is the type of thing, again, I'm looking for. The stock was below the yellow line, and then it closed above the blue line, and we just buy it there. So this is the breakout type of trade. Now that it is broken out, it could come back and pull back towards the blue line. So right now the blue line is at $2.88. And I wanted to highlight, so sometimes knowing the future is not necessarily useful. For example, in this particular case, let's say back on here 29th of December, I knew the future. I'm going to turn on my indicators and see where they're going. So you can see that the indicators were not lining up. So this is a good sign for me that usually that's not a very useful future. So when the indicators do not line up, the current and the future projected ones, then I use the current ones, because there is no way to really use it. For General Motors, if we go back to the August of last year and turn on the indicators, and here they were matching. But what I'm trying to tell you here is, for example, if I was making a decision on the 1st of October here, and I knew the future, and I can see that, there's dark blue line, it's a little bit lower than it was back on October 1st. So quite often the price itself follows the lines as well. So if I kind of knew about the future back here, and I was like, oh, maybe I'll wait for the lower price and then I'll buy it then. However, you can see that it immediately, almost immediately broke out, and we made a new high. So you can see that the indicator split and just really nothing. No use for the future here for us. So what this is showing is you can kind of overthink the trade by thinking that you know the future, and then miss the trade, because you'll be deciding too long, and then the trade will go away. So sometimes knowing the future is useful, but remember that the future is it's not yet, it hasn't yet happened. So we must assume chances of it happening. So basically, sometimes future is useful, sometimes future is useless. That's the best I can explain for you. Don't get paralyzed by the future. Make a decision today. Here's dollar index. Dollar index has been in a downtrend since at least June of last year. I kept saying, if you listen to my previous videos, I kept thinking that we're bottoming. We keep not bottoming. So maybe we're bottoming. It's possible. Looking at gold, here's gold futures. So we made a new high back on 7th of August. Kind of trading sideways to down since then. So right now it is technically on a buy signal. Gold is technically on a buy signal right this instant. But because of the way the dollar is acting, it seems that it wants to bottom, and since gold is priced in dollars, if the dollar appreciates, gold will depreciate. So additionally, here's potential usefulness of the future. So we're looking into the future here. You can see the lines are coming up. So in April, this is going to be the bear market, and we're basically there already. So April is not that far off. We're in February, March, beginning of April. So we need to kind of be cognizant of this, and this is the reason. You can see current bear market territory is at 1688, 1690, but future bear market territory is 1822. So kind of this worries me basically. So I'm very cautious with precious metals right now. Silver looks stronger. In fact, there was several opportunities, one back in September, another one in October, another one in November, and you would have made it profitable basically, because you definitely went to target. But with dollar, the way it's acting, I just want to wait and do nothing again. And here's a good reason why I keep hammering in that it is better to sit tight and do nothing. My actual trade for Ethereum, this is Ethereum versus US dollar, where I'm hovering right there on 24th of September. I went ahead and I bought Ethereum at ridiculously overpriced, what I thought was ridiculously overpriced at $344. It went in my favor. I got to my target here on 12th of October, which you can see my target is really small, because my target was ATR, 2 average, 2 ranges. So ATR back in September of last year, where I'm hovering, see where I'm hovering right there? I just read it off there. It's around $30. So I sold about a quarter here, about $60 higher, so maybe $50 higher or so. And then I'm just sitting in a position. Then again, you can see we came up above the green line. I decided to take some more profits. And then a few weeks later, I decided to take more profits. And then right there, finally on the 10th of December, I closed the position at, a substantial profit for me. But notice what happened afterwards. It went up another, it was at 600, was about 600, and it went up to 1400. So this is what, sometimes the best thing to do again is to do very little and to trail higher. So if I was sitting back here in the position 24th of September, I would have been trailing at the blue line. And I would have been still open. There was no touch of the blue line. There was no close below it. So, you could have entered the 344 and you could still be open at around 1,000. Very nice trade. So my advice, sit tight in the position, try to do very little. All right, so head over to everyonecantrade.com. You can also go to MasterChartsTrading.com. It will take you to the same place. Now, right now I have this is a remnant of last week. It's probably gonna go away. It just doesn't make any sense. So you have basically 2 bundles to choose from. One is trading indicators together with a stock screener. So you can get the same indicators that I'm showing here, like for example in General Motors, this green, blue, red and yellow lines, they're there to help you make trading decisions, make your life super simple. So this is the trading indicators. Also we have what's called the stock screener, where our stocks, or rather our script will find stocks that are breaking out above the blue line. You can then make a decision on buy it. So this is included in trading indicators. Now the speculator bundle actually has two of my blogs, which are called Elite and Stock Speculator. So for example, for the Elite blog, these are the stocks I'll be covering, and also I'll be covering, forex and gold in the Elite section. And the Speculator basically covers only stocks, and you can see there's quite a bit that I cover in the Speculator stock blog. We also get the deep, in-depth videos every week, and you get basic, full bundle at $100. I think it's a killer deal. You should sign up today. All right, any questions? Let me know. Click on contacts and sign up. And let me know if you have any questions. All right, that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching, and have another great trading week. Bye-bye.